Today, you're going to learn why your accountant or financial advisor may be costing you thousands in retirement taxes. The first reason you could be paying thousands more in retirement is because you're working with what I call a theorist advisor. This is somebody that's well read. They've got a finance degree, they got designations. And every single time you sit down with them, all they want to tell you about is how smart they are and how they passed a new test and they read this in a book. And I know somebody watching this is going to have had that experience. And they are probably really smart, but it doesn't mean that they're wise. And just because they read it in a book doesn't mean they actually have the practical experience of delivering it to a client. One of my favorite proverbs is that if you want to understand and learn the path ahead, ask the person coming back. And a lot of times, what I find with financial advisors and accountants is they never went the road ahead. They don't know what taxes look like because they've never actually walked a client forward into that future. So where they can walk back and meet you where you are and tell you, hey, this is the experience that clients are having, and you need to do something accordingly. And so they'll tell you how to retire, but if you or how to save money on taxes in retirement based on what they read in a book. But if you ask them how the practical situations can change and if they've done it themselves and help people do it, they're honest, they'll say no. And so for that, I tell you, a theory level advisor is the lowest level of an advisor you can have, whether it's an accountant or a financial advisor, because they're just going to tell you what the book says, but they don't actually have the wisdom to tell you how it applies to your financial situation. The next level is what I call a witness advisor. These advisors work on a team. So you walk into the office and you can tell they're not the head honcho. It either says junior financial advisor or junior accountant. You can tell they don't run the business. You were passed along to them because you don't have a big enough account or something. But they work on a team of successful advisors. And you can tell from the atmosphere that people know what they're talking about. So they don't own or run the business themselves, but they work closely with the people that do. And so a lot of times, if you start asking them about, hey, how do I save money on taxes in retirement or different retirement solutions, they might tell you that they don't know the answer directly, but they know people who can, or they can directly say, hey, I've personally never done it, but my partner, Brian, he's saved people $200 million in taxes in retirement. And when we leave here today, he's going to help me build the plan that I'm going to come back with you today on what he's done with people that have worked in the past. And so if you leave an interaction and that is the result, that's a good sign. These aren't the best of the best advisors to work with, but these are the accountants or financial advisors that at least have the resources and the team that have the expertise that they can come back to you with recommendations based on actual experience that can save you money on taxes and retirement. The third is what I call an application advisor. So all recommendations and strategies are coming directly from this advisor you're meeting with. It's their ideas. They not only read it in a book, they've done it before, they've innovated, they've incorporated. So you're hearing it directly from the horse's mouth. You walk in and they're the financial advisor. Maybe they have some people beneath them that are doing some work, but ultimately you're getting it from them and you're hearing it directly from them. And they've done it before and it's worked repeatedly for clients for their benefit. They're extremely valuable to work with because they've walked their walk and they can talk the talk with their advice. Typically, these people will also tell you what hasn't worked, which is also a good sign. Maybe you push back on a recommendation. They say, okay, that's fine, but let me tell you why that doesn't work based on experience. That's a good sign you're sitting down with an application advisor, whether it's an accountant or a financial advisor. But then the highest level is what I call a trifecta advisor. They rarely possess all three levels of expertise. The first level that we talked about was a theorist. The biggest mistake I see at the witness and applicator level is that they're still not sharpening the saw and they go off of predate, even if they come up with the strategies themselves that are working with sharp people, they're not sharpening the saw. An example being, we bought a practice from a gentleman who was 70. He was doing things based on things that he learned 20 years ago. The world's rapidly changing. You can't really afford to make financial decisions and educate people based on 20 years ago's advice and experience and what you read in a book then. And so these advisors, they're constantly learning, they're constantly upping the game, they're aware of what's going on, they see the path ahead financially, and they're constantly adapting based on what they learn. They're also qualified in the witness category because I'm not patting myself on the back here. What I will tell you is early on in the business, I didn't have a lot of experience. So what I did is I did literally thousands of meetings with financial advisors with 20, 30, 40, even 50 years of financial planning experience, and I got to learn from people on what works and what doesn't work and get the wisdom and literally sit in client meetings and practically help people and learn at the same time. And so what I find is the trifecta advisor, even though they've transitioned to the applicator, there was a phase where they learned from the best of the best, kind of like Top Gun. They went through a Top Gun phase of being with the best, and it's up to their game, but they didn't get satisfied and they became an applicator. They built their team, they built their business, they took what they took what they learned in books, they learned from advisors, and they innovated. They created something unique. And when you sit down with this person or you listen to their content, it's different. There's a different confidence and composure. And when they tell you something, there's confidence behind it, not because they read it in a book or because they just came up with the idea, but because they have the experience and the wisdom of how it works. These advisors are rare. You don't come across them very often. And you most likely aren't watching this if you're working with an advisor and they are a trifecta advisor, or you clicked off, before you even got to this part. So you're most likely not working with them because they're rare to find. And when it comes to the differences and what's costing you thousands in retirement, a lot of people are heavily dependent on their accountant. Your accountant's job is to look at today and look backwards and say, based on previous income earned, what can we do today to reduce your taxes? Their job is not to look forward 15 tax returns ahead and say, what can we do to save Brian taxes in retirement? That's not how it works. Their job is to say, hey, Sally, you earned $100,000 last year. What can we do to deduct that to reduce taxes today? So when you're in retirement, that's a helpful relationship because they're going to give you added expertise alongside the financial advisor, but they're not thinking ahead, which is where the money is really saved on taxes in retirement. And then on the financial advisor side, if you're working with a theorist, they don't have the wisdom to execute and actually know what they're going to save you on taxes in retirement. The witness they might have the resources, they might have the team to save you money on taxes in retirement if it's their focus. A lot of witness advisors work for advisors that they're what we call asset managers. They're focused on rate of return and building an investment portfolio, and they go with what the people above them on the team recommend. And very few times is tax as a focus. So you'll get good rates of return and hopefully have a sound investment portfolio, but you're going to pay taxes and just take that as the norm because the witness is just along for the ride. The applicator is great because maybe they've incorporated saving taxes and retirement into it. But ultimately, what we find is financial advisors, they don't have the wisdom to have walked enough clients forward, actually have the negative experience of a client paying taxes and actually taking ownership for it. A client paying taxes in retirement, if they're unaware and they work with a financial advisor, is the financial advisor's fault. And very few people take accountability. And so these advisors that can actually save you money on taxes in retirement, they are telling you from the experience and the wisdom of a missed opportunity. They corrected it, they innovated into their business, and they're well equipped to help you save money and thousands of dollars on taxes in retirement.